Hello classmates, my name is Kelsey Lewis, and as part of business communications class, we're required to do a YouTube video summarizing an article from CNBC.com. The article that I chose was U.S. Strengths Buoy Consumers but Hurt Corporations with Businesses Abroad. This article was written by Landon Thomas Jr. and was published on January 28th. The article talks about how American consumers are currently benefiting from low oil prices, low interest rates, and also a strong U.S. dollar. It also states that U.S. consumers' confidence is the highest that it's been since 2007. The article also then discusses about markets abroad and how they are in turn impacting the U.S. market. It talks about the European Central Bank buying bonds in an attempt to stimulate the European economy. It also talks about the Greece and the governmental debt and how that has impacted the U.S. It also talks about how stagnation in European and Japanese markets could potentially hurt U.S. corporations. Ultimately, many U.S. corporations that rely on global businesses and trade in several different markets, not just domestically, are ultimately going to be hurt this year and have a lower bottom line. The two main causes that are going to hurt corporations are a strong U.S. dollar and global stagnation. The two main areas that are going to be the most hurt by these factors are oil and banking, which it's clear that low oil prices and low interest rates are going to have a direct effect on these two markets. The article specifically cites Procter & Gamble and Microsoft as stating that a weak global market and the strong U.S. dollar is having a negative effect on their earnings. Ultimately, the article concludes that the low oil prices and the strong U.S. dollar will hurt American companies more than it'll help the American consumer.